What are the pros and cons of having a home equity line of credit or HELOC? What is a HELOC? Is HELOC a good way to consolidate your high interest rate debt like credit cards and personal loans? Is HELOC a good tool to renovate your home, fund your retirement, or pay for living expenses? Am I going to use HELOC for my financial independence journey? Let me first briefly explain what a HELOC is. A HELOC is essentially allowing homeowners to use their homes as collateral to tap into the equity of their homes. How much you can borrow depends entirely on the value of your home. If you have equity in your home, HELOC is the way to withdraw funds over an extended period of time without ever selling a home. You can even get a HELOC for your investment property, but it comes with stricter lender requirements and higher interest rates. And make sure you don't confuse a home equity loan with a HELOC. A home equity loan is when you borrow the full lump sum you're approved for all at once from the equity of your home, and you need to pay back both principal and interest within 5 to 30 years. Most lenders will let you borrow up to 80 or 85% of your home's equity. So if your home is worth $400,000 and you owe $300,000, then your equity is $100,000, right? Then the lender might let you borrow up to $80,000 or $85,000 for your home equity loan. A HELOC, on the other hand, is a revolving credit line, so you can take a portion of the equity out of the home value and make interest-only payments during the draw period, typically between 5 and 10 years. You will need to repay the interest every single month. And once your draw period expires after 5 or 10 years, or whatever the agreement is between you and the lender, your HELOC transitions into the repayment period. And during the repayment period, you're not going to be able to make additional draws. And your monthly payments will no longer be interest-only payments, but will include both principal and interest. And if you have a zero balance on your HELOC by the time you enter the repayment period, your account will typically close automatically. And however, if you do have a balance on your HELOC, it's important to keep track of your draw period so you can be ready to repay the principal and interest during the repayment period. And you could make a significant change to your budget while the repayment period lasts anywhere between 10 and 20 years. Now, let me give you some examples of a HELOC. If I'm looking to apply for a HELOC, I want to ask or look for answers to the following questions. Does this HELOC offer a fixed rate option on an outstanding balance during the repayment period, or is it just a variable rate? Or is there a cap on the interest rate? Being able to fix the rate going into the repayment period could help you save some money on interest. Can you convert some or all of the variable rate HELOC to a fixed rate loan without a fee? What is the initial draw amount? Is there a minimum draw amount? Do you get a discount on the interest rate with the lender if you open other products like a checking or savings account? I know some banks do. How long is the draw period? And what are the options for the repayment period? It's typically a 5, 10, or 20-year repayment term. What is the maximum line of credit the lender allows you to have? Remember that HELOC is like a credit card, right? So you need to know what the annual fee is during both the draw and repayment periods. And some banks waive the initial annual fees. And what are the closing costs, if any? What are the penalties if you decide to close your HELOC early? And do you have the option to refinance? And before I get into some more examples, don't forget that you can get our financial independence resources for free by visiting firesidechat.com/contact. You can also check out the Fireside Chat shop if you're looking to start your own YouTube channel, and I have all of my equipment at firesidechat.com/shopping. So let's say I have a house that's worth $400,000 and I use my home as collateral to open a HELOC, but only up to 50% of my home's value minus what I owe on my mortgage. And I'll just say I owe $200,000 on my mortgage to make it easier. With $200,000 in equity in my home, 50% of that equity will be $100,000. I'm going to keep the loan to value ratio to 50% to make things easier here. My line of credit would be $100,000 with a 7 or 8% variable interest rate, assuming my credit score is in the excellent category at 760 or higher, and due to the current federal funds target rate of 3% in 2022, or I think it's 4% actually, I'm sorry. The typical term comes with 10 years for the draw period followed by 20 years of the repayment period. If I decide to make an initial withdrawal of $10,000 at an account opening, I would probably owe anywhere around $100 or $120 a month in interest payments for 10 years during the draw period, which also includes the annual fee for my HELOC. Again, keep in mind that the $100 a month in payment is not fixed, so the payment could fluctuate based on the prime rate. And what you also need to keep in mind before opening a HELOC is that you need to treat this like a credit card. When you carry a balance month over month, you're going to owe interest on it. HELOCs are generally variable rate products, so that means your interest rates could fluctuate based on the prime rate, right? So the interest rates in 2022, for example, have been increasing due to the strict monetary policy by the Federal Reserve. And during the draw period, your HELOC will follow the prime rate, and it could be 5% today, 6% next month, or even 7% next year. So you could be paying more or less in interest month over month, depending on the Fed. But the general rule of thumb is the federal funds target rate plus 3%. So if the Fed funds rate is 3%, then the prime rate will be around 6 or even 7%. Now let's talk about the pros and cons of getting a HELOC. And you have to keep in mind that how you use your HELOC can have both positive and negative effects on your credit score. If you have a HELOC, you should always make your payments on time, period. And this concept applies to all other types of loans or debts or even your bills. First, you can withdraw your funds with a high credit limit while making interest-only payments during the draw period for typically 10 years. You could withdraw money to pay down high-interest debts or debts that are in collection. You have to keep in mind that a HELOC should not be your ultimate escape plan from debt because you're essentially using your other debt to pay off your debt. Your ultimate goal should be staying debt-free to achieve your financial independence. However, if you have outstanding credit card debt, medical bills, or payday loans, you should be very careful with how much you're willing to leverage your house to pay off these other debts. If you have $20,000 in outstanding debt, you should only take out that amount and have the ability to pay it off within a year or two, hopefully a year. Second, you only make payments on interest during the draw period. However, you have to keep an eye on the Fed because the interest rates are variable. If you already have a HELOC and you're close to going into the repayment period, contact your lender to find out if you have the fixed rate option. Before you take money out of your HELOC, you need to have the plan to pay the balance in full. You should never bite more than you can chew, right? Third, while it's nice to make interest-only payments during the draw period, you need to be ready for the repayment period if you plan to have an outstanding balance. If I have, let's say, $100,000 in the outstanding balance on my HELOC going into the repayment period with an 8% variable interest rate, my monthly payment could be $800 or $900 a month, and that could be devastating if I'm in a lower income household, right? Anytime you take out a loan or withdraw funds from your HELOC, you should never feel comfortable with it. You need to have the plan to pay down the debt. Fourth, every HELOC comes with annual maintenance fees, transaction fees, and other management expenses. That's how banks make their profits, right? You would still need to pay fees for inactivity if you go too long without withdrawing any money. And on top of that, some lenders even charge you for closing your HELOC too quickly after opening it. They may charge your closing costs because when you close the account, they're losing their profits. And what happens if you miss your payments? Your lender could foreclose on your house to repay the debt because they basically own your house now. And what happens if your home value goes down by 10, 20, or 30%? Your lender could freeze or reduce your credit line if your property value drops. And that's already happening in 2022 and most likely going into 2023. Again, you have to remember that you are leveraging your house to borrow more money. And am I ever going to need a HELOC to renovate my home or fund my retirement? Absolutely not. People on the FIRE journey don't leverage their homes to pay for something they want. The only line of credit I would even consider using is the securities-based lines of credit, or SBLOC or SBLOC or SBLOC, I don't know, which leverages my investment portfolio when my net worth is $5 million or $10 million or more. That's more of a tax-saving strategy that many multimillionaires and billionaires use. And you can watch this video about the SBLOC, and I'll put the link in the description below. I use my FIRE checklist to invest for my long-term retirement, early retirement, travel, entertainment, and home renovation. Nowhere on the FIRE checklist does it say I'm using my HELOC to fund my early retirement or build generational wealth. I have been debt free since 2016, except for my mortgage, and I plan to keep it that way for the rest of my life. I never took out a HELOC to pay down my debt. As a financial coach, I have comprehensive tools and strategies that can help you pay down debt without taking out any additional debts. And if you need help with your personal finances, you can schedule a free one-on-one 20-minute financial coaching session by visiting firestarchat.com/coaching. And if you want to know more about how I became debt-free and have over $1.1 million in total assets, be sure to check out these 2 videos. So with that said, I appreciate you watching my video. Don't forget to subscribe, and I hope to see you in the next video. Have a good one.